Welcome back to another video. This video is all about trend and the famous saying, trend is your friend. So let's get started. First thing first, please read the disclaimer below, guys. Please pause the video to read this. Once you've read it, please continue with the video. Okay, so trend is your friend. A lot of people have been asking me about, how important trend following is and what I like to do in my trading. So I'll be explaining in this video. Like I say, guys, there's an old saying that says trend is your friend until it ends. So, you have to stick to your friend, which is trend. You don't want to be going against it, because going against the trend could cause you a lot of losses, could cause you headaches, could affect your psychology. It could have a negative impact on your trading. So it's best that we follow the trend, and then how we do it is really important. So I'll be covering that in this video as well, and how we identify the trend. I've also made a video on that previously as well, so you can go back to it and have a look at it as well. But I'll be briefly explaining that in this video as well, and also I'll be giving you tips and the challenges for following trends and how we can overcome them. And hopefully by the end of this video you'll gain a lot of knowledge about following the trend. Okay, so like I was saying to you guys, there's a really famous saying that says trend is your friend, and this is really crucial in Forex market, guys, because we need to be following the trend in order to be on the right side of the market, in order to have a high effective strategy, in order to increase our probability of winning. And this can be done very effectively if we follow a certain type of criteria, a certain rules in our trading, and we can do that in various ways, which I'll be covering as well. So what is trend following? Trend following is basically, it refers to just going with the trend. Wherever it's going, we'll be going following that as well. If the trend is going up, we'll be looking for buys. If the trend is going down, we'll be looking for sells, because with the trend, there's chances of momentum being there and chances of a particular direction being followed until it ends is really important. And then for us to be on the right side of the market, basically we want to be following the big boys, guys. So we want to be following these banks, we want to be following these hedge funds, because they're the market makers, as you call them, and we're just average retail traders. And our small sell position, for example, like a 0.50 or a one lot, will not be competing against thousands and thousands of lots that are currently active against us. So 9 times out of 10 we'll get stopped out, and this is where a lot of guys make the mistake, because they think that if we counter trend, we're going to come out with a massive R to risk to reward trade. So we'll risk 100 pips, we'll come out with 2,000. It doesn't work like that, guys. This is Forex. We need to understand how it works. We need to know, what the market is doing, and we need to follow it. We can't make our own direction. We have to follow the direction, and this is really important. And if you do that correctly, guys, 9 times out of 10, or a lot of times out of 10, you'll be on the right side. And if you have the right risk to reward, and if you have the right strategy for it, then you'll be ultimately be profitable. Okay, so as you know, guys, there's types of trends. So first trend is uptrend. Uptrend is basically, like as you can see here, this is an uptrend. We're making higher highs, higher lows, higher highs, higher lows. So the market is going up. Downtrend would be this, if it was going all the way down, but it's still valid an uptrend because it's equal to higher highs and higher lows. So we've only just broken one structure there, so it's too early to determine if the market is going down. But downtrend would typically look like this: low highs, lower lows, lower highs, and so on and so forth. So this part would look like a downtrend, but this part would look like an uptrend. And like I was saying to you guys, uptrend is the high highs, high lows. Downtrend is the opposite, which is low highs and lower lows. And we also have the ranging market. So we can technically say, or we can say that this is a ranging market, because the market is going sideways, like a horizontal line. So it's not really going up, but it's not going down. So in an uptrend, we'll be looking for buys. In a downtrend, we'll be looking for sells. In a sideways trend, I would personally stay out of it, because it's too complex and it can be too complicated as well. And we don't know what the market's doing, and we don't want to be guessing. We want to be sure for 100% that this is what the market is possibly going to do, based on confidences and based on our strategy, and hopefully follow that as well. So why should we follow the trend? It's really easy, guys. We should follow it because it's simple. If we know the market's going up, and simplicity wise, instead of making the situation more complex, we should be looking for buys if it's going up, and we should be looking for sells if it's going down, not the opposite of what the market is doing. There's also volatility, and it could be provided, in different things. And this includes different things like, you can have you can have an opportunity for long term, you can have an opportunity for short term, and we just want to make sure that but again, it's very similar to the first point, but we need to make it simple, we're not making it complex, and we need to make sure that this opportunity aligns with our strategy, and we're following the opportunities and we're not following the market makers, and we're basically riding the trend, but we're not going against it, we're not standing in the way. It's like catching a fall in life, guys. If you catch a fall in life, it'll go through your hand, and you'll end up damaging your hand. Or if you're going in an airplane, if you crash into like another airplane that's above you, then you'll end up crashing down, and both airplanes will end up crashing down. And again, it's quite simple. That's just for the example purposes anyway, so that you guys know that we're not going against the trend, we're going with the trend, and we're going to make money by following the trend. So another thing is risk management, guys. We need to make sure that we use the same risk management for all our positions. So we can't be, let's just say, if you've put a sell position down, the market's going against you, and your stop loss is 10 points, then we don't want to be increasing our stop loss, and we don't want to be adding on to our losing positions. So we need to follow strict risk parameters in order to be profitable in Forex trading. Okay, so strategies for trend following. This is a really important one, guys, and please pay a lot of attention to this, because this will help you a long way. Okay, so first thing first, moving averages. As you know, guys, I personally use my moving averages as well. So I use the 20 period and the 50 period. So let's just say the blue one is the 20 period, and the purple one is the 50 period. And as you can tell, if the price is below the moving averages, I would look for a sell. If it's above the moving averages, then I'll look for a buy. And I'll also be looking at the structure as well. So markets making lower highs, lower lows, lower highs, lower lows, lower low again, then we're making another lower high, then making a lower low, and then after everything, we're going to break this big arrow here. It broke the structure, so there's a trend line here as well, a big purple line, as you can tell. So it broke the trend line, and now the price has gone above the moving average, for example the 20 moving average, so we'll be looking to buy. But then again, here there's another break of structure here, and the price has broken our trend line, which is this arrow here, and it's gone below the moving averages, so we'll be looking for sell. So we're following the trend, we're not going against the trend, guys. It's really important. So trend line, I do that by trend line is also, I've drawn a, as you can tell, I've drawn a trend line for going down, and I've also classed this as a trend line for going up. So it's really important. We can also use indicator based strategies as well. There's things like the MACD, I've got a video on that as well. There's things like the RSI, I've also got a video on that. And there's things like the ADX, and there's loads of different indicators that we can use to see where the market's going. So you guys can benefit from it in various ways, and we can make a collective decision based on multiple probabilities or multiple factors to increase our chances of winning. So it's really important. We can also recognize the chart patterns. For example, like I said to you earlier on, guys, that there's a break of structure here. So if there's a break, retest, and if we're going looking for buys, again, there's a break of structure here. There hasn't been a retest, but we can enter if it breaks the low off that particular support level, and we can go down that way. So I've made a video on spawn resistance as well, so you can look at that in my previous videos. But again, there's certain patterns that happen in the market, and if you recognize them, then the chances of us winning in Forex they basically increase, and there's more probable that we'll be on the right side of the market. Okay, guys, so there's also challenges and things that we need to consider. We don't want to be sat there like this person here, totally confused, and we don't want to be thinking like what exactly has happened. We need to know what's happened, and we need to predict what's happened, and we need to prepare ourselves for what the market's doing, and we need to know what to do and what to avoid in the Forex market. So there's challenges like the late entry. So if you've missed an entry, if you enter too late, then our stop loss will be too big. It can affect our late risk to reward as well. And if the market does a possible correction, so if you've entered too late and the market does a little bit of a correction, it can stop us out, because there's not much leeway for the market to move, especially if our stop losses are too tight. There's also things like the false signals. So let's just say there's a trend line that broke, there's a false break, and then it's gone against us. So we need to be prepared for these scenarios as well. So we want to make sure that we don't get trapped in the market's false signals, and employ proper risk management techniques in order to cover our back for these losses, and in order to be on the safe side. There's also things like the patience and discipline, which a lot of traders, they lack this and they don't realize that they lack this, because in forex trading, guys, we're our own boss. We can do what we want. We're sat on our computer. There's no one there to tell you, look, James, Harry, Mike, you can't do this, you can't do that. So there's no one there to tell us anything. So it's really important that we have, number one, we're patient. We're waiting for the correct format or correct chart pattern or correct procedure to be followed, or correct plan to be followed. And secondly, we need to be disciplined. So we can't break the rules, we can't over leverage, we can't over risk, we can't over expect. So we need to be disciplined, we need to be patient, because this will really go a long way in forex trading. And it's really important that we apply this, because with this it can help our psychology as well. It can increase our win rate, and ultimately help us to last or be profitable for long term in forex market. So conclusion, guys. In conclusion, as you know, that guys, that this video was all about following the trend. Trend is your friend until it ends, and we're going to follow the trend. We're going to follow our friend, which is what I'm saying. We're not going against him, because then number one, it'll go against us, and we'll end up in a loss because we're standing in the way. We want to take the back seat, not the steering wheel. So we're just the passengers, we're not the riders. So that's really important, guys, that we follow it that way. Again, it's just certain techniques that I've shared as well in this video, which will help you go a long way. So you can always go back to it, and you can always look at it as well. Also, the concept is quite simple, but it's understanding the market dynamics and strict trading plan and strict rules that we need to follow. That is the hardest part. So if you stick to strict rules, strict plan, then there's a high probability that you'll be profitable, and you won't be caught against the fake moves, that you won't be standing in the way of the market, and you'll have lower risk parameters and higher risk to reward ratios and higher profit levels, which is what we ultimately want in trading. So in this video, we've covered the trend is your friend. We've also covered the types of trends. We've covered why we should follow the trend, and the challenges and the strategies for following the trend, and the challenges and things that we need to consider in trend following. So guys, this video is really crucial. Please go back to it if you need to. Please like, comment and subscribe to our channel. And again, we're on social media platforms as well, like the Instagram and Twitter. So give us a follow there, and drop us a comment if you want any specific topics to be covered. I'd be more than happy to cover that as well. And hopefully see you in the next videos, guys. Thank you for watching. We'll see you again.